What is up, traders? Hope everybody's doing well. Continuing the bias series of the lectures. Today I'm going to be going over again how I determine my bias for this session exactly step by step to help you guys understand the bias better. So, starting off, higher time frame. Obviously, as usual, we go to the daily chart. Coming into the day, we were still in a range, right? So this day, at the time of the session when it opened or before the session opened, we had not swept this buy side yet, so we were still around here, right? So what we could see is this previous day, obviously we had wicked heavy wicking or sweeping previous day's low and then closing on a bullish note, and then the next day we were not at this buy side, we were below it, right? So we're like in this region. Okay, so on the daily, we can see obviously we have this buy side with this buy side with this inefficiency. We have this short-term buy side after a sweep of sell side and a rejection higher. So on the higher time frame, it does look like we're a bit more bullish because we swept the previous day's low on this candle and closed on a bullish note. So it only makes sense that the closest strong liquidity now is these highs, right? So on the daily chart, we're getting kind of a gauge of where the market wants to go based on what's presented, okay? So if we drop down to the 4-hour chart, now we can start to see more detail. We can see this 4-hour buy side imbalance, sell side inefficiency, so busy right here. If you see, this was the 6 a.m. candle, and then this was the 10 a.m. candle. So this, when the market opens and pre-market is this candle right here, right? This 6 a.m. candle. It's a 4-hour chart, so from 6 to 10. The market opens at 9:30. So when we came to look at the market, we were in this candle. So what does that give us? That gives us that, okay, we have this nice push up, a break of structure on the 4-hour chart with this buy side imbalance, sell side inefficiency. So if we want to see price continue higher, I want to see this be respected. So the previous 4-hour candle at the time had closed within it, pushed lower, sweeping this 4-hour sell side. And when we drop to the 15-minute, we're going to see how there's more sell side here, right, with an inefficiency that was tapped into. So we have this sweep lower of this 4-hour candle and a close in this buy side imbalance, sell side inefficiency. And obviously, I'm including the volume imbalance, right? We remember that when you have a fair value gap with a volume imbalance, you include the entire thing. Okay, so now I want to see this candle close bullish and then for us to continue higher. So if we drop down to the 15-minute, we can now start to see how we have these equal lows right here, right? We have sell side resting below all this low right here, all these lows. We have this inefficiency right here, and we can see how price came down, tapped into it, rejected higher on the 15-minute chart, breaking structure, turning breakers, order blocks, all that kind of nice stuff. And then on the 15-minute chart, we can see how we have this inefficiency when you include the volume balance. Let me mark it out for you guys. This is all pre-market. We're trying to gauge where the market wants to go, right? The market opens right here at 9:30. So the market opens at 9:30 right here on this candle, right here. Market open on this candle, okay? So let's put that, I don't know why I don't have that marked out. Boom, 9:30, right? So then I'm going to add the 9:30 open right there, okay? So this is all from here to here. This is all pre-market. So now we have this inefficiency pre-market. With the market open, we see price dip into this inefficiency and then close on a bullish note, okay? So I'm going to delete this inefficiency now, or let's leave it. I'm going to drop down to the 5-minute, okay? So now we're seeing how we have this sell side sweep, this tap on the 5-minute, on the 15-minute, sorry, with this inefficiency, rejection from it, right? We're seeing on the 5-minute how we're respecting bullish order flow. How, if we zoom in, we can see how we have this equal lows swept on the 5-minute. We did break structure technically, but there's no strength. All we did was wick, tap into this inefficiency, and reject, right? You need to have common sense. Like, okay, yes, we broke structure, but what did we do? If you guys remember from the previous lectures, I told you that yes, sometimes it's like trying to sacrifice something for another. Yes, we're going to have a breakup structure, but for what? We tapped into an inefficiency, right? So for us to see that we're going to maybe come and tap up these lows and these lows, we really have to at least inverse this fair value gap, right? So all we did right here on the 5-minute was sweep the sell side, come tap into this inefficiency, and then close back in the range. And then on the 15-minute, as we saw, we were respecting bullish order flow, and then we push up, we sweep this internal buy side, right? We still have this buy side intact, which is this high, right? Still intact. Didn't sweep it yet. So after this push up, we still didn't sweep it. We have a nice retest. If you look on the 5-minute, you have a nice fair value gap right here. Inefficiency. Now I'm going to take this ray off just to show you guys. This was to show you guys the time. I'm going to take it off now. So now we have this inefficiency on the 5-minute, right? We've taken out sell side here and before. We've acknowledged that we're bullish order flow. We have this buy side as a target. I'm looking for an entry now. We go to the 1-minute. Again, we had that 5-minute inefficiency. Then I'm going to look for an entry within it. Okay? So if you go back to the 5-minute chart, this was the inefficiency. I'm going to mark it out right here. This was the inefficiency. Okay, so this was the inefficiency. So if you drop down to the 1-minute, so you see this is the inefficiency right here, right? And then what's this? This is the 930 fair value gap, right? The first presented fair value gap. So we have this 5-minute inefficiency right here. We have price push on the 1-minute, break structure. Didn't take buy side yet, so that buy side target is still intact. We come down, look at all these factors. We fill this 5-minute. We tap into the 930 fair value gap, and we tap into the 930 opening price. I don't know if I talked about this, but a lot of times from my experience, I see price respecting the 930 open and the 415 close a lot, especially the 930 opening price, right? If you see this kind of rejection, this just aids your bias, right? We came down, the 930 value gap, respected it with this nice wick, and then we also have filled the 5-minute, tapped into 930, respected it. So at this region, you could just enter longs, or if you want extra confirmation, you can wait for this inverse to happen and then enter off of this candle right here. So you would enter on this wick, boom. And then stop loss, where would stop loss be? We all know that you don't really have to put your stop loss all the way down here. This is a huge ass stop loss, no. But we do know that wicks are gaps, so from previous lectures. So you would do is from the low to the high of this wick, right? So I'm gonna take it off right now. This wick right here, you have this wick. This is a discount wick, right? In regards to price, we're here now. This is a discount wick. So this wick, we know that wicks are gaps. So if we're bullish, we really don't want to see price reprice to the midpoint of this gap. So if you would have entered here, you would have put maximum your stop loss below the midpoint and then TP at the high. Now for me, I took this trade and I didn't really have to wait for confirmation of this inverse. With experience, you can start to tell which setups are just gonna play out. So for me, as soon as I saw us respect the 930 opening price, respect the 930 value gap and the 5-minute gap, I entered around, I recall it was somewhere around here. I put my stop loss below midpoint of this discount wick, and then TP was at the highs for a nice about 1 to 2 or trade, right? So that's how you determine bias. As simple as that. And then if you extend the 930 value gap, and by the way, one last thing. What time did this all occur? 9:45, 10:15. We got the entry at around 10:10. And then if you waited, you would have got your entry at around 10:13 with this wick. So it all happened, which is the most important thing. I should have mentioned this at the beginning, but I forgot. I'm sorry. The most important thing is time. If this happened at a random time, I'm not saying it won't work out, but it's less probability. And all we want is higher probability. Cool. Now, if you take out and you extend, that's why you guys saw me extended the 930 value gap. The 930 value gap was extended During the PM session, it was re-respected, and then from there, price continued higher. So if we look, what is the time here? Time is 1:19. We broke structure right here. 140. Macro is 145, 215. That's the last PM macro. We retrace, still not macro. Here, this is where the macro starts. Zoom in. So we're zoomed in now, right? During the macro, we have this nice 145 right here. We push up, we break structure. We still have buy side above as targets. I'm going to show you guys that again. What would my entry criteria be here? Well, we know that wicks are gaps, so we can simply, this is a wick, this is a nice wick. We can take this wick and enter off of around premium of it. So anywhere around here, right? So you would have entered, let's say here. Stop loss would be below 50% of this wick. This is a very nice lecture on wicks, by the way. Of this wick right here, below 50%, right? Because wicks are gaps, so I'll put my stop loss. I don't like to put my stop loss right at the midpoint, which if we did, we wouldn't have been stopped out anyway, but I like to put it at around the lower quarter, right? So anywhere around here, would have put it around here. And then TP, as we can see here, we did have more buy side to be swept right here, right? This was more buy side that was swept. This was the PM session. This was a PM session trade. That would have been, I didn't take this honestly, but looking back, this was just a nice thing to journal, how it respected the 930 value gap during the PM session, and then went and took out this buy side. And we can see this buy side is these equal highs right here, right from days before. So that's it, right? We went step by step. We kind of analyzed and saw how we got the bias, right? With the sell side sweeps, the respecting of the 930 fair value gap, the 930 opening price, 5-minute gaps, all that going from the higher time frames all the way to the lower time frames, right? Step by step, putting all the time frames together and then coming out with an analysis, right? Bit by bit, this will get easier with time, okay? If it's still hard for you, don't worry. You can watch this again. There's more bias videos that are going to come. This is the most, like, this topic I'm going to be stuck on for a while because this is combining everything that we've learned and then live days that I'm actually trading and then coming back and analyzing them in depth to why I took this trade, whether it's a win or a loss, right? Why I took this trade, how I thought, the thought process behind it, and all that type of stuff, all right? That's going to be it for this video. Hope you guys found this insightful. If you have any questions, feel free to shoot them. And until next time, stay safe and happy trading.